Good afternoon, everybody. Going to go over our Forex trades for today, Thursday, January 21st. We had four trades. They were two correlation trades, pulled out 10.7 pips on a size-adjusted basis. Non-size adjusted basis, 41.3 pips. So we'll go over them in a minute. First, the economic news. The ECB announced their interest rate decision this morning, so it was very difficult to be able to trade this morning. So at least we had these two last night that we liquidated throughout the night. As far as the ECB, they kept rates unchanged. That surprised the market a little bit. I think people were more geared for them to possibly cut rates. They didn't, as I said. Some of the comments by Mario Draghi, he started speaking about 45 minutes after the announcement of leaving rates unchanged. He says rates should stay at the same level or lower for some time, which actually gave a bid to equity prices around the world in Europe and the United States, and obviously was hurting the euro. Draghi cites volatility in commodity markets, geopolitics. Downside risk has increased again. I mean, that's pretty much an obvious. Policy stance will need to be reviewed in March. Policy stance will potentially have to change. So that was also another bid to equity prices around the world and creating the euro to sell off, because he's obviously open-minded to either cutting rates or increasing quantitative easing. Inflation outlook significantly lower than in early December. It's amazing that, again, we've been harping on this zero bound rates. So there's really no inflation to speak of, which is amazing. And that's pretty much all he really had to say while he was making his comments, and after the decision. The 2-year note in Dutch in Deutschland, if you want to call it, their note dropped to the 2-year yield dropped to a negative 0.425%. It really is amazing what's going on around the world. As far as economic news here in the States, we had the Philly Fed came in with a negative 3.5 versus a negative 5.9 estimate, which was actually a little better than expected, but the Philly Fed showed a contraction for the 5th month in a row. So that's not a good sign at all. Let me go back to, there was initial jobless claims, I believe. Yeah, initial jobless claims surged to 6-month high. And this was after, this is the Fed just claiming that things are so great that they raised rates. So here it is, initial jobless claims surging to 6-month highs, which is not another bad sign for the United States economy. The Philly Fed was the actual only bright spot today. JP Morgan came out this morning, was saying to stabilize equities, one would need a strong catalyst, such as another round of easing by the Fed. So JP Morgan is out basically calling for the Fed to either cut rates, reverse course, or institute QE4. As of this morning, there was a 0% chance the Fed hikes next week, about a 20% chance they hike in the March meeting, and it doesn't get over 50% until November, which doesn't look like they're going to be hiking rates anytime soon. So that was pretty much all the news this morning. Just trying to see if I'm missing anything here. No. Okay. So let's get over to the trades. We had, like I said, 4 trades. Both were correlation trades. So first one is Aussie yen, which is correlated to Aussie dollar. We were short Aussie yen 81.308, covered 80.950, picking up 35.8 pips, or size adjusted 14.3 pips. We had 40% of our normal size. Aussie dollar, we also had 40% of our normal size. We were long this 0.69295, sold 0.69088 for a loss of 20.7 pips, or size adjusted 8.3. So net up about 6 pips there. Pound yen, we were correlated with the US dollar Japanese yen, a little different than the other day where we were correlated pound yen to pound dollar. So this is pound yen to the US dollar Japanese yen. Pound yen, we were short this 166.516, covered 165.942 for 57.4 pips, or size adjusted 17.2 pips. And on US dollar Japanese yen, we were long this 117.380, sold 117.068 for a loss of 31.2 pips, size adjusted 12.5 pips. On US dollar Japanese yen, we had 40% of our normal size. And on pound yen, we had 30% of our normal size. So net there, it's about, let's call it 4.7 pips or so. Close to 5 pips. So we'll take it in the end. 4 trades up 10.7 without taking a whole lot of risk, right? Correlation trades really reduces our directional risk. So we'll take that with the added volatility in the markets around the world. We're getting more chances to do the correlation trades, so we'll take advantage of them. Surprisingly, there hasn't been a lot of directional trades. There were a couple bypassed a little bit. So we'll, like I said, with the correlation trades, you're reducing your risk, and we're doing just as well. So we'll keep it going. As long as the volatility remains, we'll be all right. And that's it. Trying to think. There's really nothing else. So if you're still trading now, good luck. If any signals come out, they'll be coming your way, and we'll be back tomorrow, assuming we get some action tonight or tomorrow morning. Have a great rest of your day.